Soundhound AI has had quite a nice couple of days. In the last 5 days, the stock is up 32%, and at the time of making this video, pre-market, the stock is up another 5.92%. So what's the reason behind this strange move with regards to Soundhound AI? Because remember, the stock has gone up already quite a lot thanks to Nvidia's earnings report and to Soundhound earnings report as well. And then after that, it dropped by around 33%. And since then, the stock has made its way back up over $6. But let's talk about the strange reason why Soundhound AI did rally for the last couple of days and is continuing to do so right now. For those that don't know, Soundhound AI, market cap of over $2 billion, EV to sales in the next 12 months, 31 times, so definitely not on the cheap side. Yes, it is growing quite fast, as you can see here. The analyst expectation for fiscal year 24 and 25, 51% growth for fiscal year 2024 with regards to sales, and then closer to 48% year-over-year growth for the next fiscal year. As for the current analyst price target, there are 6 analysts covering this company, and currently with the pre-market action, the price will be above the average price target. Now, as you can see here, for the past couple of weeks, the stock has been overbought, but just because it has been overbought did not mean that the stock could not have gone up more and more, which is exactly what it did. Right now, it does seem like we are going to go and try and break the previous highs here at close to $8. Of course, we've covered Soundhound AI's earnings report, earnings call already on the channel. If you missed those videos, those will be in the top right corner. There is a lot of growth. There's of course that big push from that Nvidia investment as well, which has popped up this stock quite a bit. But more recently, I didn't find any news related to Soundhound AI, didn't find any news of a company investing in Soundhound AI to justify, let's say, maybe justify isn't the word, but to explain why the stock has gone up so much in the last couple of days. Until I looked at another company that I've been following, another cloud player called Oracle. I'll explain in just a bit. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Oracle, they reported their latest earnings report. Stock went up 11.75% during that day, market cap of $350 billion, forward PE, quite okay actually for a company that is now seeing its growth reaccelerating, 21.2 times. These are the analyst estimates for the coming fiscal years. Of course, a bit lower than what we've seen in the past with other, let's say, hyperscalers or big tech companies. But still, as you will see, growth is reaccelerating. So if we look at their latest earnings report, GAAP earnings per share of 85 cents, non-GAAP earnings per share up 16% to $1.41. Total revenue, $13.3 billion, that's up only 7%. You might say, okay, I still don't get it. Well, look at what happens next. Total remaining performance obligations, or RPO, is up 29% to $80 billion. Cloud revenue, $5.1 billion, up 25% and up 24% in a constant currency basis. Cloud infrastructure, revenue there, $1.8 billion. That was up 49% year over year, both USD and constant currency basis. Clearly, they are seeing some or a lot of tailwinds with regards to cloud infrastructure, the whole cloud industry, which of course we know. We've heard Amazon, we've heard Microsoft, we've heard Google, Nvidia, all those players, we've heard the positive comments with regards to cloud spending already, so it's no surprise. But for some reason, Oracle never gets mentioned. Maybe that's because they've been lagging behind for the last couple of days, but if you read through the last couple of reports, earnings calls as well, there were some indications that, well, they were hiding in plain sight. I've talked about it with Jose on this channel as well. When we talked about semiconductors, we noted the rise of Oracle. So now the point has been proven. The CEO even commented here, they expect to continue receiving large contracts reserving cloud infrastructure capacity because the demand for our Gen 2 AI infrastructure substantially exceeds supply, despite the fact we are opening new and expanding existing cloud data centers very, very rapidly. We expect that 43% of our current $80 billion of RPO will be recognized as revenue over the next 4 quarters, and that our Gen 2 cloud infrastructure business will remain in a hyper-growth phase, up 53% in Q3 for the foreseeable future. So, 21 times forward PE, seeing these types of acceleration, my opinion, there might be an opportunity here. And for those that are interested, they've also declared a quarterly cash dividend of 40 cents. The dividend will be paid to stockholders of record as of the close of business on April 10th, with a payment date April 24, 2024. And so, if we look at the graph, we can see that right now, the stock is back where it was rejected twice, back in June 2023 and back in September 2023. Could it be third time lucky for Oracle? I do think that right now the business does seem to be a bit stronger, has way more momentum, so it wouldn't surprise me if suddenly we go a bit higher. Now, of course, back then, as you can see here, June 2023, RSI was way overbought. Then in September, RSI was a little bit overbought. Right now we're back at the same point, but RSI is still not overbought. Could be a good thing, could mean that the stock has some space to go higher. Again, this is just from a technical basis. Should always look at what the business is doing. It's way more important. Now, going back to the main point, what does this have to do with Soundhound AI? Well, since right now every company that deals a little bit with AI, we know that Soundhound AI deals quite a lot of it, right? With regards to voice recognition, helping restaurants, kiosks, etc., etc. We know pillar 1, 2, 3, these will pop up on the screen. So every time we see a company that hints at acceleration in spending in AI infrastructure, cloud infrastructure, companies that already have that momentum will gain from that. We've seen Nvidia pop up yesterday as well. It's all part of the same group. Positive AI sentiment, positive cloud spending, and these types of companies. Right now, the stock will go up. Does it make sense? Probably not. It's more important to look that the business is doing better than the stock just going up and up and up mindlessly. So that's the whole story. That's why Soundhound has gone up. That's also why Meta and Nvidia have gone up quite a lot yesterday. Although Meta and Nvidia, there is a better correlation there because of Meta spending on infrastructure could be better linked with Nvidia. But overall, that's for Soundhound. And by the way, here also part of the video for Oracle, which in my opinion is quite a stable and good company at an okay price right now. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye. I also wanted to add one extra thing here is that, of course, there was an analyst that said that the virtuous investment cycle for the big names are thanks to artificial intelligence. So that could also have popped up some of the AI-related stocks. The analyst said history suggests companies in reinvestment cycles like this one underperform, but we see a potential virtuous cycle forming from artificial intelligence investments. This comes after more than 10 years of underinvestment. Well, technically speaking, all of these big tech companies have outperformed the market already this year and actually last year as well.